In this video, guys, we're going to ask the question, are you overcomplicating your trading? Stay tuned. Hey traders, a very warm welcome to you. Thank you for joining me. All right, so the video is sponsored by those guys in the description below if you want to go and check them out. Multi-regulated, so if you've had trouble getting a broker before because they don't cover your specific country, might be worth going and checking them out because they are regulated, as I say, in multiple different jurisdictions, so you might find they cover you where other brokers do not. Okay, so what about simplifying trades a little bit more? I think we could all benefit from this. Listen, it's so easy for us to go down a rabbit hole because life tends to reward stuff that seems complicated, right? You know, if you think of all the high-paying jobs out there, they're quite highly skilled and reasonably complicated. Brain surgery, pretty complicated. Flying a plane, pretty complicated. All these kind of things, and analogy is not the best, but you get the idea. So we tend to think that the harder something is, the more steps, the more things we have to do, then the better it's going to be. Actual fact, guys, trading isn't that way at all. And I'm not saying that simple means easy, because that's far from the case. You know this, I know this. You know, trading is not an easy thing to do. However, it is simple, and I think we should all probably look to try and simplify our process a lot more, simplify what's going on. So imagine we're buying a standard pullback trade. Market's gone up, we're buying a pullback. Listen, you and I both know that in the right conditions, buying a pullback, forget about how we time it, forget about all the other things, is a statistically profitable strategy over the long term. You could argue for this and that and the other, and I'll give you all those arguments, but we know that generally if markets are trending, when they pull back, they're probably going to continue the trend. So us trying to time the pullback isn't a bad thing. So there's three things really, ultimately, that could happen with price, isn't there? We can either have the price go up to our target, either come down to our stop, or it can just sit there and do nothing and then eventually go up or down at some point, depending on how long we give. There's nothing much more that can be done. Now, there are some extremes where it might just suddenly rip off and gap up, or it might just gap down. But apart from that, there's not many outcomes other than that. But as traders, we try to overcomplicate things. So we say, right, well, we've got some technicals, we've got these news, we've got this, we've got that, got the other. And so our decision-making process becomes so convoluted and so many steps into it that we think the more steps we have and the more ducks in a row we have, the better the trade. In reality, guys, it doesn't affect the trade one bit. You know, we get to a point where we get diminishing returns. At the end of the day, in this example, if we have a trend that's up, if we have a pullback, we're probably 80% of the way there. We're in an uptrend already. We know that uptrend's likely to continue. We're pullbacks, we're not chasing. And after that, we're just adding little bits of nuances, like trying to get a little finesse the entry a little bit with a trigger, maybe taking a lower low that spikes back up, maybe taking a little bull flag. You know, all these little things that we can add, they're all very good and they all work within a kind of realms of it. But ultimately, the real weight behind this is the simple fact that this market is going up and we're waiting for a pullback to buy it. And so, you know, when we think of it like that, and we think in terms of risk amounts. So again, we're simplifying the entry and we're simplifying the risk management. So we say, right, I'm going to buy this and I'm going to stake, say $200, whatever the number may be for you, $20, $2,000, $50,000, doesn't matter, on the outcome of this. So I'm prepared to take $200 out of my pocket, put it down and say, yes, this is what I'm prepared to lose, but I want to win $1,000 if I'm right. There's my target, there's my stop, whatever it may be. Obviously it'll be more than that because of the risk-reward ratio, but you get the idea. And again, it's as simple as that. And in reality, you know, when we're just looking at stuff objectively, it's a 50-50 outcome. If we forget every other thing, if I just said to you, long or short on this asset, it's 50-50, right? It's going to be a 50-50. So from there, we're just adding bits and pieces, like we're an uptrend, all of a sudden we've now got a slightly bigger edge. We're buying a pullback, got a slightly bigger edge, so we're adding layers of edge to it. But ultimately, when we get to a point, like I say, we get to the point of diminishing returns, there's no point in us doing, oh, this indicator, that indicator, going over complicated. So let's just simplify our trading. Let's just think, right, how much I'm prepared to risk on this? And that is very simple as well, guys. You know, the chance of it gapping massively against you are very, very slim. Depends on the asset you trade, of course, and there's a risk warning there for a reason. But in majority of cases, Forex, forget about S&B for the time being, very, very rare when you think about the whole Forex universe. But you're trading Forex, you saying, hey, this is what I'm going to stake and this is what's going to happen. And it becomes as simple as that. And the process for trade selection should become very simple as well. I think that we get bogged down too much in overcomplicating stuff, and we use all these extra fancy indicators and little techniques and strategies and all this kind of stuff. And there's nothing wrong to a certain extent with having a process. And if you want to have something that I just consider fancy as your process, then that's fine. But then just really say, this is what this is telling me, and I'm just going to say, you know what, I think that's the right trade to take. I'm going to stake my money on that. It's a very, very simple outcome. This is my stake. This is what I'm prepared to risk. If it works, great. If it doesn't, I'll lose. Next one, next one, next one, next one. And simplifying everything. Not only does it make it easier for you, not only does it then put things into context, it also doesn't add too much weight to the trade, because we could all be guilty, guys, of everything looks perfect. Well, oh, this is the best trade ever. I've researched this. I've done my homework. You know, it's the perfect chart set. I've got the perfect trigger entry. I've got all the things lined up for me. Okay, I'm going to take it. And it stops you out. And then you just like, well, I did everything. I spent so long. And that's the whole point. It's a simple process of placing a bet on a probability of an outcome turning out in your favor. And that's it. And it's always going to get trades go against you, always going to get trades going your way. So, summary, guys, simplify your process, go through your process now, have a look, and just think if there's something you can just get rid of. Just think if there's something that, you know what, if it didn't match up, or if you didn't do it, it wouldn't really bother you one bit or another. And go through and see if you can prune your process and your risk management strategy and everything right down to its basics. How much I'm prepared to risk, what do I really want to see, and try trading from that. You can always add more. But in reality, I find that when you take stuff off and you make things simpler, it's like having your charts, isn't it? You know, if you keep your charts clean, less indicators, it feels much easier to make a decision. Same with the whole process. Take it right back, even to a point of, is it an uptrend? Yes. Is it pulling back? Yes. Okay, I'm going to pull the trigger, whatever point I like, and I'm going to risk $200, $500, whatever the deal may be. And then if you want to add more and say, okay, it's better on a Tuesday morning, or it's better after Fed day, or whatever, then fine, add those bits. But if you simplify it from the beginning, I think it's much, much easier, guys, than overcomplicating it and wondering what's going wrong, why you can't make a decision, why you can't hold trades, why you keep breaking your rules, all this kind of stuff. Anyway, that's simplifying stuff, guys. Are you overcomplicating your trading? Have an objective, look at it, see what you think, and let me know in the comment section below. Don't forget to check out our channel sponsor, HYCM, linked to them in the description below. Take care, bye-bye.